Welcome to Real Talk with Nivoda, where we speak about what's actually going on in the diamond industry. Today we'll be speaking with Paul Zimnisky, who's best known for his State of the Diamond Market Report, which is used by banks, consultants, governments, and many of us in the industry. We'll hear from Paul how he got into the industry. We'll talk about lab-grown prices and the split between natural and lab and consumer demand. We'll also talk about the effect on the jeweler's bottom line and what the future outlook of the industry may be. Welcome to the show, Paul.
Yep, thanks for having me.
So Paul, tell us a little bit about maybe your background and what you did before you got into the industry and how that led to you doing what you do today.
Yeah, so I actually have no background in the diamond industry, you could possibly argue that that's helpful not having a previous connection. I think it can kind of give you a fresh perspective if you're an analyst like I am. But my background is as a financial analyst, and I really kind of wanted to narrow in on a specific industry and become an expert in one particular area. And I would say I'm just kind of naturally intrigued by this industry. It's always been something I've found kind of unique. I've always been interested in international business, and I think diamonds are as global of an industry as any. You have a supply chain that spans continents and cultures and different religions and countries with different levels of economic development. And then within the supply chain itself, you have, all these different concentrations. You have, the geologists, engineers, and, miners, if we're talking the upstream. Then, in the midstream, you have, the artists and the jewelry designers. And then, downstream, you have, the luxury business aspect, which is, built on marketing and creating, emotion and desire for the product. And then you have, the history of the industry and the monopoly structure. And, that's a case study in itself. So, the industry really has a lot to offer. It's very unique, and I think it just intrigues me for all of these reasons.
Oh, amazing. Well, when did you start writing the report?
So I started covering the industry exclusively probably approximately 10 years ago. And it was, so I really got to see, I think, kind of the rise and relevance of lab-grown diamonds pretty much the whole way through to where we are today. So it was kind of an interesting time to really start covering an industry closely, given kind of the transformation that it's going through.
Okay, amazing. And Paul, like with your report, who are you writing it for? I presume, to me it looks like a good marketing tool for your services, I guess, as well. But like who's the core audience of your report?
Yeah, I mean, it's definitely not a marketing tool. It's a professional monthly industry report that includes all of my data analysis and forecasts for the industry. And initially, it was targeted at outside investors that were looking to possibly make an investment somewhere in the supply chain that really knew nothing about the industry but wanted some independent research. And now my client base. It includes many of the largest players in the industry throughout the whole supply chain. It includes governments, management consultancies, academic institutions. So I think anybody that's kind of doing research in the industry or already has kind of a stake in the industry. At this point, I'd say my client base is pretty diverse and pretty global.
Okay, amazing. So like some of the things that you dig into, I think I've got a few questions here that I think are going to be super useful for our listeners, particularly manufacturers, wholesalers, and the retailers of the industry. So some of the things are, now that Trump is taking office next week, what do you think that we can expect? Do we have to, well, what can we expect in terms of tariffs or any other implications?
Yeah, so I don't really see, this having any, direct impact on the diamond industry per se. I think, the impact's gonna be more derivative, with what's happening, on a more macro or global economic sense that's gonna, have a knock-on effect on diamond demand. I do think, just globally, I think we are going through, somewhat of we're going through a period of deglobalization, and I think that's something that you're kind of seeing throughout major economic players in the world. It's not just the U.S. So I think there is going to be some movement. Say if you're in North America, I think it'd probably be strategic to to expect a future where, say, the U.S. is closer to the NAFTA countries, Canada and Mexico. I think there's going to be, say, manufacturing, and not diamond manufacturing, but just general goods manufacturing, maybe moving from the Eastern world more towards North America, Canada, and Mexico, that sort of thing. And I think that's going to kind of have implications, right? And I think in the U.S. alone, I think the U.S. is going to probably revert to doing more domestic manufacturing, I think, which could kind of boost, say economies within the Midwestern portion of the United States. And I think, for instance, that could be an example of where you could see, consumer demand growth and say the southern U.S. and more of like the Midwestern part of the country that I would say in the more recent past has kind of been slower growth area economically. So I think there's going to be changes like that, depending on where you operate. I think there's, going to be certain, things you're going to want to kind of focus in on. But as far as, just, specific or direct impact on the diamond industry, I don't see the elections, have any kind of, direct or acute kind of impact on diamonds.
Okay, so not in diamonds, but maybe in jewelry, right? So our supply chains from manufacturing in India and China, we could have duties that may be added to that. Is that what we're seeing?
Not necessarily. I think if you look at the Indians, I mean, I think they, understand how important the gem and jewelry trade. I think it's like the third biggest export industry for the Indians. India in itself is probably going to be the fastest growing large economy in the world for the foreseeable future. I just got back from India a few weeks ago, so I kind of have a fresh view on what's going on there. But I think India is going to continue to be a major player in just diamond manufacturing, jewelry manufacturing. I don't really see much changing there.
Okay. All right. What are we seeing within the lab grown in terms of prices and in terms of share of engagement ring sales? What are you seeing there?
Yeah, so it's still, based on what I'm seeing, it's still a very much a US centric product. I estimate that, upwards of 85% of lab grown diamond jewelry demand is, for looking globally, is in the US. So the product still really hasn't picked up, significant traction in, say, the second, third largest consumer markets of diamonds, which are China and India. So still very much a US product. Um, I mean, again, the product has been on the market in a more mainstream way. I'd say we're kind of approaching, 10 years at this point. So I think maybe some of the novelty is gonna start to wear off. Yeah, I think anybody that's been kind of paying attention to what's going on is very much aware that prices have come down quite substantially. I really closely began tracking lab-grown diamond prices, I'd say back in 2015.
Hmm.
And if I look at where we are today, if we're looking at prices in wholesale, I mean, they're down 80, 90, in some cases 95% to, where they were 10 years ago. And I think, that was to be expected. It's a manufactured product. Producers of lab diamonds have, found ways to produce it more efficiently, at lower costs, thanks to improvements in technology. And then you have economies of scale. Again, it's a manufactured product. So at least theoretically, the more you produce, the per unit cost should be lower once the fixed costs are invested. So, I think those are probably the two primary reasons we've seen, production costs come down, and I think that's reverberated, pretty closely in the wholesale market, where you haven't seen that as much as downstream at retail. So if you look at the delta between wholesale and retail prices, it's still pretty wide. And just based on, an analysis I've done for just looking at generic, unbranded loose, lab grown diamond, you'll still see, retail margins, 75, 80, 85%, which is, double, what the natural diamond industry has historically seen. So I think there is, some room for those margins to come down. And if they ever kind of come down to levels, seen with natural diamonds, just, based on that theory, most, lab grown diamonds are going to be selling at, well under, sub $1,000 price point. So I think the industry really kind of has to take a step back and kind of decide, where it wants to play, how it wants to position itself. Do you want to be a fine jeweler selling, diamonds in the multi-$1,000 price point, or do you want to be selling, more jewelry, more like, fashion jewelry oriented price points in the $100 price points? And I think that's, that's kind of been the trend, that's kind of been the progression, but we're really getting to what I would, describe as like an inflection point if we're looking at, just, price points and lab diamond versus natural diamond, and then, potentially, some normalization and margins downstream of lab grown diamonds. So that's what I'm, keeping a close eye on. I'm kind of the belief that the reason that lab grown diamonds took off as strongly as they did is because retailers were really, pushing it, and they would have a customer coming into a store looking, to buy a natural diamond engagement ring, and the retailer and the frontline salesperson, ultimately convinced them to, buy a lab grown diamond, because the price, the relative price point, is so much more affordable, and the retailer was incentivized to do that, to try to capture that fat margin. So I think if you start to see the margins come in, I think retailers could go back to pushing natural diamonds again, just because it would be in their best financial interest to do so. So that's kind of just something I'm trying to keep a close eye on. You're seeing some indication of that. But we're still, certainly at a point, if you just look at the most recently concluded holiday season, retailers are still seeing growth in lab grown diamond sales, if we're looking at volumes at least. I think, given that prices have come down as much as they have, I think a lot of that's offset the growth and volume if we're just looking in value terms. So again, I think we're kind of really getting to an inflection point, and 2025 should be an interesting year to see how all this plays out.
Yeah, I agree. We've seen the prices of lab grown level out over the last 4 months. So I'd say late Q3, we've seen that they've been able to stabilize a bit at the point we're at. I'm not sure. What do you think the bottom is going to be? Do you have any insight into what that would be?
Yeah, I mean, so, as we were talking about before, I mean, prices are already down 85, 90% at wholesale. I mean, I don't know how much more room there is for them to go lower. I do think, the price of the material, the price to produce it, will continue to get lower. And the reason I say that is because you definitely have, lab-grown diamond producers that are aiming to eventually produce lab diamond for high-tech applications. And I think in order to do that in a mainstream way, for to get a large technology company to buy, raw, lab diamond material for use in high tech applications, I think, the price is going to have to come down further to make their economics work. Again, at least if we're talking about, like, some more mainstream applications. So I think the producers are still incentivized to try to, continue to improve the technology and get their cost of production lower. And I think, that certainly could also impact, the cost of lab diamond for use in jewelry as well. So that's kind of, something that I think is worth keeping an eye on. But again, given, how much prices have already come down, I think there's a lot less room for them to come down further. Again, I think if we do see, further price compression in lab grown, I think it's going to be more, downstream, and it's going to be maybe contraction of the profit margin at the retail level. I think there's certainly more room for prices to come down on, say the downstream side more so than the midstream side.
Yeah, exactly. And that's the same feedback we've had, having a chat with suppliers. They say, please, let's work out how we can do more business together, but don't talk to me about price. I'm at the bottom. So that's a sign of that. I think what we're seeing now is retailers talking about the dollars per engagement ring sale that they can actually make. What's happening with the retail prices? It's following the wholesale prices that come down and leveled out. So we've still got some more time for that to adjust. And I think that the conversation at the retail point in some of the businesses that we're speaking with is to use language that helps to sell a natural diamond. I guess trying to look into the future, it's hard to say how many of those conversations will lead to actually changing a consumer's mind or not. So I find that a challenging one to predict what the split will be over time. Would you agree with that?
Not necessarily. So again, my view is that the reason that lab grown has taken off is because retailers were incentivized to make it take off, and thus they were doing a pretty good job to convince consumers to buy a lab grown diamond over a natural. And that's something that somewhat took me by surprise. That I guess I guess that for me it really hit home that consumers, diamond buying consumers, really can be influenced by the retailer or the frontline salesperson. And I think that's just because people have super busy lives and they have careers and families, and they have so much going on, they don't really have time to really understand the nuances of the industry. So I think if they go into a retailer and they trust the retailer, they'll kind of take their advice, and they can be influenced, to an extent because of that. So the point being is, if retailers were able to influence consumers to buy lab grown, I don't see why they can't, go back to influencing them to buy natural. I mean, I think that's at least one way to look at this. So I would consider, at least thinking about it that way. But I mean, for retailers, I think the one thing that's really disappointed me. So, just this past holiday season, I went into a few jewelers by me, and I live in a relatively nice area, and it's in an area where consumers could afford, nice fine jewelry. And I walked into a few independents, and they were selling, natural diamonds and lab grown diamonds in the same case. And there wasn't even like markage or signage within the case, which was which. And I asked, the salesperson, which of these diamonds are natural and which are lab grown. And the salesperson didn't even know. They said, I have to, pull it out and look at the tag. So, I mean, I think the industry is really, it really has to be careful and kind of decide how it wants to position itself. And, do you want to sell your merchandise as high-end, fine jewelry, or do you want to just sell it as, commoditized fashion jewelry? And I think the consumer is already confused for the reasons I said. I think there's have very busy lives. They have a limited amount of time to really, study and invest time to understand the nuances of the diamond industry. And just anecdotally, I could tell you, people that are not in the industry, I would say more than half, still don't know that you can distinguish between a lab grown and a natural diamond. They think if they're buying a natural diamond, they just have to take the retailer's word that it's natural. They don't understand that you can chemically differentiate with certainty. I mean, so we're talking like the most basic, fundamentals of selling a diamond, this day and age. I mean, the customer has to be crystal clear that you can distinguish between the two. That's why the one's priced at multiples more than the other. And I think by merchandising them in the same case without signage, it should go without saying, but it's just insane to me. So I mean, I think there's still a lot of work to do here, even though the lab grown product's been out for almost a decade now. I'm quite disappointed that the industry hasn't done a better job of really trying to inform the consumer, on at least the most basic fundamentals of diamonds, this day and age, that you can distinguish between these two with certainty. The one is a manufactured product, it's beautiful, but the other one, natural, it's beautiful, but it's also rare and valuable. It's a non-renewable natural resource, and they're different products because of that. And diamonds are a luxury, and luxury isn't necessarily a practical rational purchase. It's an emotional purchase. And I feel like the industry's, lost its way, and I think if it's not careful, it can kind of get to the point where, it's going to be very difficult to get back to where we were, 25 years ago. So, again, I think we're kind of getting to an inflection point, and I think the price differential between lab grown and natural is kind of really driving that home. But I really hope that, the industry as a whole can start to think further down the line, and where does it want to be, where does it want to position itself, and I think it starts with, making sure the consumer understands, the difference between the two products. Because if you can't do that, I think diamonds are at risk of just, losing, relevancy as a product, and just losing consumer confidence as a product in general.
Okay, so there's two parts about it. One is the language that's happening in the sale in the store, like actually at the point of sale, and the second part is the marketing of natural diamonds as an industry. So we've seen the De Beers and Signet worth the wait, but what since De Beers once had 80% of the rough supply and was able to spend a marketing dollar on natural diamonds and recoup that from a natural diamond sale, now that they've got 30% of it, how do you see that we come together as an industry to market natural diamonds?
Yes, I mean, I think again, if you look at, I don't know, there's the luxury goods market, and you look at the price of gold as a commodity. I mean, diamonds have underperformed the larger luxury market, and diamonds have underperformed gold, right, in recent years. And I think the one thing that people don't really acknowledge is that this industry has been going through a transition the last 25 years since the dismantling of the De Beers monopoly. And it's exactly what you said. De Beers had 85% market share. Now they have a third. So De Beers isn't in a position to kind of support the whole industry the way that it did 25 years ago. And I feel like nobody really wants to acknowledge that. And I think, because the industry hasn't, fully acknowledged this, um, diamonds kind of have lost relative share. So the solution is of course for the industry to come together with kind of a common goal, which is to continue to make, diamonds, relevant and desired by consumers. I mean, diamonds, were probably the highest end luxury product you could buy. So I mean, you kind of have to maintain the status of the product, and the industry just has not done that. The last 20 25 years. So I think if you look at the fact that the industry has lost relative share, I think it was inevitable, right? And I think it's understandable why that happened. And if you just kind of do an analysis on what was spent on marketing back in the day, there's no official figures on this, but I would estimate that if you look in inflation adjusted dollars, the diamond industry was spending, $450 million a year on generic diamond marketing. Today, it's I don't know, it's like a tenth, or maybe 20% of that. So I mean, that matters. It's a luxury product. You have to market it. You have to keep it relevant. You have to kind of create that desire. Consumers have to want it, and they have to want to pay a big price point for it. So I think if you lose your way on that front, I think it's very, very difficult to kind of maintain the relevancy of the product. And I think that's kind of the number one issue the industry's faced. It's just what you said. It's that the industry isn't as concentrated as it used to be, and you can't rely on one entity to support the whole industry anymore. And that's just something that's been playing out for a couple decades now. So again, I think the industry has to kind of look further ahead and decide where it wants to be, and come to the realization you can't rely on just De Beers to support the whole trade anymore. Or I think this trend of diamonds losing relevancy is going to continue to play out. So again, I think we're just at a very important time in the history of this industry, and it's been a very resilient industry, and I would attribute that to the people. Um, but we're certainly getting at a point in time where I think there certainly is a real risk of diamonds losing the relevancy they once had, if the industry doesn't take the right steps.
Yeah. Do you another part that I wanted to get to, but is linked here, is the mind to market tracking and the storytelling that we can give in terms of transparency and where diamonds come from in the natural diamond sale. But if we can move, and this is just an idea, if we can move to a place where we could market a diamond with Tracer, for example, which is a De Beers company for mind to market tracking, and that marketing dollar specifically attracts a customer that would buy that diamond, and those funds would be returned to the same company who spent the marketing dollars. This is a way that we can start to drive a new initiative of marketing of natural diamonds, where it's not just De Beers who's doing 30% and has to market for the whole amount, or another mine marketing for the whole of natural diamonds.
Yeah, I mean, I would argue that the industry has to even kind of take a step back further and again, just get to the very, very basics. I think we're to the point where the natural diamond industry has to put some kind of chip or tracer in natural diamonds that would allow consumers to easily, verify themselves whether a diamond is natural or not. So, you would still have the business to business, process of, gem labs, using chemical tracing, fluorescence, photofluorescence to determine whether a diamond's natural or lab grown. But I think once, you've proven that, a diamond's natural, we need some way to make verification easier at the consumer level. And I think a consumer needs to be able to walk into a jeweler and put their diamond, under a machine that gives an instant, reading. Green, it's natural diamond; red, it's not a natural diamond. And I think we need, verification machines and shopping, common shopping space, the shopping malls where there's a kiosk and a consumer could scan their diamond and verify that it's a natural. And I think, if we're trying to do, a chemical verification, it's very expensive and still complicated to do that on a very kind of mainstream level, like I'm talking about. So I think in the interim, the industry needs, to just put, some sort of, tracker in a natural diamond that's already been verified as a natural diamond, within the supply chain, and then, come up with a much, lower cost, ubiquitous, diamond tracking technology that could just, look for that tracer, in the diamond, which again would be a lot more affordable than doing chemical tracing diamond verification machines at a consumer level. So that's, I think, where we need to be, because again, we still have to get over this hurdle of consumers being confused, whether or not you can distinguish the two. I just think it's very, very difficult to get a consumer to spend 10x for a natural diamond if they aren't even sure you can distinguish the two. Like, to me, it's that's where we are, and you and I were kind of on the front lines, so we're this is all very obvious to us. It's been very obvious to us for a long time, but I think we have to take a step back and just acknowledge that there's still a lot of confusion at the consumer level. And then when you have retailers selling them lab grown and natural side by side inside the same case without signage, I mean, you could understand why consumers would be so confused. So I'm definitely with you on all of the story and enhancing the story. That's what luxury needs to do. You need to kind of create that desirability, and I think what you're saying is absolutely the right thing to do. But we may have to first take a step back even further, and again just acknowledge the fact that consumers are still confused between the difference between natural and lab grown. So that's, I guess, kind of my thoughts on this.
Right, I'm with you. I think also, like, the idea of marketing from the joint effort of all of the retailers, of all of the independents marketing just the entire product category. We need to create collateral and marketing collateral to get this information to the consumer, not just at the point of sale when someone walks in, but way up the customer journey, and having it online right at the beginning in our retailers' Instagram posts, Facebook posts, on their websites, and all the way at the top of the customer journey. So I've seen, and like a lot of the reports that I've been looking at, an estimate of what it's going to be in the future, that both online sales and in-store virtual sales, so like selling a diamond that's actually sitting in a manufacturer's safe, it has skyrocketed. But it's also predicted, we're guessing, and we're seeing the trends as well, for that growth to continue at more than 20% like CAGR over the next 4 or 5 years. Is your view that we need to be ready for how we communicate online to be able to win in today's environment?
Yeah, I mean, I think we all know that, 30 years ago, you'd run a commercial, on the Super Bowl, right? And you would reach, the majority of US consumers. Those days are gone. You have all these different channels, different social media channels. It's very, very difficult. I think, a marketer's job is very, very difficult this day and age. And then you look at, you have strollers that are just have a curated, web page, to a consumer's preferences. I mean, things are moving so quickly. I think it's getting to the point where, you almost have to market to a consumer on a consumer by consumer basis, which would have, been impossible, 20 years ago. But with, the advent of AI, that's becoming more possible. So absolutely. I mean, I think, there's opportunities to kind of leverage the new technology. But because of that, I think it's the luxury in the consumer market is much more competitive, and I think the industries and the companies that do the best job of that are gonna win out. But it's very difficult, these days to reach large masses of consumers, and kind of curate your messaging to those individual consumers the right way. I think it's very, very difficult. I still think using influencers is a good way to do that. You still see it this day and age where, a celebrity wears, a certain piece of jewelry or a certain, branded luxury item, it gets a boost. I know that's difficult to do, but if you get major celebrities around the world to kind of wear your product, and if we can get them to wear natural diamonds, uh, I still think that's kind of a great way, to reach your core audience. That's just, I guess, something I've been thinking about more recently.
For sure, for sure. Yeah, we've been talking about like the connected journey where somebody will browse online. Like 90% of engagement ring purchases start with an online search.
Right.
Uh, then to be able to fill in a form to book a consultation, in-person consultation, because a lot of people still want to come in and do business face to face and sit down with someone and understand what's going on, and then be able to walk out of the store and then, at home on the couch, be able to go through with their purchase and do a checkout, and for that to be, a beautifully connected journey for the end consumer. And I think it's falling down when we've done different shopping experiences where you fill in this big form and you walk in the store, and then the person that you meet with has no idea who you are, has no idea any of the information you've put in, and is not talking to you about the ring that you had. So I think really focusing in on that journey, and knowing that that is the journey that we want to create for somebody, I think is an important part for us, for us as an industry to focus on and to improve, but also for us as Nivoda to facilitate and help our retailers with. So I think that's a big one.
Yeah, I mean, again, it's like, do you want to be in the business of selling high price luxury items, or do you want to, be in the business of selling, low price fashion jewelry? And if you want to, be selling, high price point, natural diamond jewelry that sells for 10, 15, $20,000, you have to give the customer that luxury experience. And then I think that kind of goes to what you were just saying. So I would argue that the higher, the higher and the highest end of the diamond jewelry industry has done a good job. So we're recording this in mid-January. Richemont, the parent of Cartier and Van Cleef, just released results this morning, and I mean, they had an amazing quarter. Their holiday was up. I think it was up. Their jewelry was up 15% year over year. They had a record quarter. So the companies that really continue to invest in their brands and continue to offer and deliver that high-end luxury experience to their customers, these companies continue to do well. And I think it's the companies that are just trying to kind of go through the motions and sell generic goods the way they have in the past, that just doesn't work anymore. And it's too competitive. And then you add in all the other complications that we were talking about earlier, and it gets very, very difficult.
Paul, if you had to predict the biggest shift in the diamond industry in the next 5 years, and you had your crystal ball, what would it be?
It's going to get back to what I was saying before. It's like, how are jewelers going to view lab grown versus natural? The ever evolving price points between the two. And I mean, I just don't see how we can go from an industry where the average engagement ring sale in the US was $5,000-$6,000. Today I estimate it's $4,500. And that's after going through the highest generational increase in inflation the last 5 years. I mean, it's just unbelievable. We've had significant inflation, and at least again based on my analysis, we're talking just generic diamonds. The overall average price that consumers pay has gone down. So I mean, that's a big challenge. And again, I think the average price of diamond has come down because lab grown diamonds are deflationary, and that's also impacting the way that I think consumers view the larger diamond category, again for reasons like they're confused between the difference and whether or not you can distinguish. So I mean, that's the big thing going on right now. It's like, so could the industry kind of get its act together and kind of acknowledge what's going on here, and really do the right thing to market its product properly, and kind of get that average price point back up. And again, I think it's going to be the responsibility of the whole supply chain. But I would really like to see the downstream kind of really do its part now, and really kind of help educate the consumer accordingly, and differentiate the way they sell their products, because they are different products, and if you want to sell at a different price point, you have to merchandise it as a different product. So I just think it's going to be it's going to be around that narrative. Again, I think we're getting at an inflection point, and I think we're going to really maybe start to see some of that play out this year. But yeah, 5 years from now, the question becomes will diamonds still be a relevant product, and will it be perceived as one of the highest end luxury items you could buy, or will it just become less relevant, maybe just a novelty? I don't know, and that's ultimately going to be up to the consumer. But if you're in the fine jewelry business, I think that's certainly something you should be thinking about.
Okay, amazing. And last one for our newcomers to the industry, what advice would you give someone who's just starting off?
I mean, I think it's a very infectious industry, and again, I think that's because of the people. I mean, I'm an independent analyst. I have no background in this industry, and I can pretty much cover any industry I want. But I love this industry, and I love the people, and I love how global and diverse, and it's a very exciting industry. The history is just fascinating, and yeah, I think most people that kind of get into this industry from another industry end up sticking with it, and again, I think that's kind of what makes it so unique, and I think that's why this has been such a resilient industry, and I guess I'll just kind of leave you with that.
That's awesome. That's awesome. Thanks for joining us, Paul.
Thanks for having me.
All right, see you, mate.
I hope you enjoyed this candid chat with Paul Zimnisky, and I look forward to seeing you for the next episode of Real Talk with Nivoda.
Nice.
All right. Yeah, I think that was great. You know what? It was. I think we actually covered some things that are valuable. We weren't beating around the bush.
Right.
I mean, I'll tell you, with my podcast, it does best when you're kind of candid, right? I mean, people want to know what's going on, and they want to hear the honest truth, even though it's not necessarily always fun. And I think we did a good job of being candid, and I think the things we talked about are things that people in the industry are thinking about, but are sometimes afraid to kind of say out loud. So
Yeah,
hopefully,
the real stuff, right? The real talk.
Yeah.
That's what it's about.
Yeah.